folks, Chris Janzon from Harcourts Sargent, and thank you for joining me on the couch. Today we're joined by a very special guest, Simon Beck from Your Mortgage Assistant, and we're here to talk about the roll-on effects from the recent Banking Royal Commission. So Simon, obviously we deal with a lot of homeowners and buyers in the marketplace. What would you say are some of the key findings that have come out from the Banking Royal Commission to those consumers?
Living expenses. Previously, as a broker, I've got a responsibility to confirm your living expenses. Previously, I would sit with my client, have a conversation, and that's how I'd verify your living expenses, through a verbal conversation.
Yep.
Now the banks are requiring us to go a step further, which is actually, let's verify those living expenses. So as an example, if you're telling me your food expense is $1,200 per month, I now need to ask you for the last 3 months' bank statements, and then I need to go through the bank statements to confirm, is what you're telling me of $1,200 food expense, is that correct? So if I look at the bank statements and I see the actual food expense is $1,500 per month, when you've stated $1,200, I then need to declare to the bank of $1,500 is the expense.
So now it's based on more actuals rather than a general assessment on approximates.
Well, it comes back to this concept of responsible lending.
Yep.
The banks are now just taking an additional step. Well, if the client's telling you their food expense is $1,200 per month,
Yep.
go the next step and verify how they're coming to that number.
Okay.
Because from a responsible lending point of view, if we're giving them a loan of $300,000 based on living expenses of $1,200, but their actual living expenses are $1,500, we may be putting them into a loan which is unsuitable and unaffordable. So it's just about going to that next level to confirm, is what the client telling me true and correct?
Yep. So Simon, let's talk about consumer debt. Out there at the moment, there's a few channels where people can get credit pretty easily through Zip Pay, Zip Money and Afterpay. Tell me the effects of this and how you have to disclose the debt that you've got currently outstanding.
So a second finding of the Royal Commission was, as I clarified earlier, of needing to verify the actual living expense.
Yep.
So as part of getting the bank statements from the client, it's about reviewing the transactions on the bank statement to confirm whether there are any undisclosed debts. So a lot of people are now buying a good today and paying for it tomorrow, which is called Afterpay. So a lot of people don't consider Afterpay to be a financial debt or commitment. However, from the bank's point of view, Zip Money and Afterpay are financial commitments. There is a credit limit associated with Zip Money. So we do need to be disclosing those debts, and through the additional requirement of actually verifying the living costs, it's also helping us as brokers to realise these undisclosed debts, which maybe the client has unintentionally forgot to mention them.
Yeah, so tell me, does a Zip Pay or Money or Afterpay credit go against someone's credit file?
Yes, so if you make any inquiry for credit,
Yep.
which is Zip Money, there is a credit limit attached to that.
Yep.
There is a credit inquiry made against your credit file.
Okay, and just tell me, like, let's say if somebody has a $3,000 drawdown limit against Zip Money or Zip Pay or Afterpay, but they've only used $1,000 out of that $3,000. How does the bank look at the whole credit limit balance?
When they're checking whether you can afford the home loan, they're checking whether you can afford the proposed home loan. If you were to max out the credit facility limit,
Yep.
on Afterpay or Zip Money.
So irrespective if you've spent $1,000 out of that $3,000, they're going to assume that you will spend the full $3,000. So they'll take the full $3,000 limit into consideration, not how much you've just spent against that borrowing limit.
Yeah, that's correct. When assessing whether you can afford the proposed home loan, the bank will take into consideration, if Chris Janzon was to spend his $5,000 limit on Zip Money, can Chris afford the proposed home loan, taking into consideration he has the full zip money limit to repay.
Okay. So Simon, obviously we deal with a lot of people who are renting at the moment and looking to enter the property market. Tell us a little bit about how rental history can be taken into consideration and help someone when it comes time to obtaining finance approval for a home.
Okay, so the banks have a requirement of what they call genuine savings.
Yep.
So the banks want to see that you have held 5%. They want to make sure you've got 5% genuine savings when you're buying a property. So what does this mean? If you're looking at buying a property valued at $300,000,
yep,
I need to be able to demonstrate you've held 5% of the property's value in your bank account for 3 months.
Yep.
Or alternatively, I need to be able to demonstrate that you have saved 5% of the property's value in 3 months. When I talk about saved, that you have accumulated through genuine savings of your wage, $15,000 over 3 months.
Okay. And does that take into consideration, so if a property is worth $300,000, is that taking into factor things like fees and charges, which might be stamp duties, bank fees and charges that we all pay when we buy?
So genuine savings, which the 5% is calculated on the purchase price. Now, not everyone always has genuine savings in a bank account.
Yep.
So some people maybe, which is quite common, mum and dad are going to give the $50,000 deposit,
yep,
to buy the property now, but they've still got to demonstrate the quality of genuine savings.
Yep.
So genuine savings can also be demonstrated through rental history.
Okay.
So with rental history, we need a copy of rental ledger from a real estate agent confirming that you've been making your rental repayments on time,
yep,
for the last 6 months.
So minimum 6 months rental history.
Correct.
So genuine savings, minimum of 90 days, money held into a bank account, and or rental ledger history from a managing agency for a minimum of 6 months.
Confirming that all rental payments have been made on time.
On time, great. So Simon, for the viewers that are tuning into us here today, whether they're refinancing or looking to buy a property, what is some guidance or tips that you could give them leading in towards obtaining a formal finance approval when it gets to that point?
So a lot of people have a house to sell in this marketplace unless you're a first home buyer. So really what existing homeowners should be doing if they're looking to upgrade, they should be speaking to a broker or their local bank about how much equity they've got in their existing property, so they know when they sell their current property, how much deposit do they have to go towards buying a new property. So a good knowledgeable broker and bank will be able to tell you upon selling your property, you should have X amount to buy a new property. At that same time, they can assess your borrowing capacity, taking into consideration how much income you're earning, and also taking into consideration your existing commitments, being credit cards, personal loans, car loans, afterpay, zip pay. These liabilities do need to be taken into consideration when calculating your proposed borrowing capacity. So would highly recommend, before any existing homeowners were to look to upgrade, is for them to get a pre-approval put in place.
Okay, so it sounds like the banks are really specifically looking at the last 90 days of your history. So whether you're refinancing an existing home, looking to upgrade or purchase a property, would you encourage in that 90 days starting to scale back on expenditure?
Yeah. So when you apply for a home loan application, I may have already touched on this. As brokers, we now need to get, a lot of banks are asking for the last 3 months cost of living, which is your everyday bank account. The bank will now be analysing your transactions to determine how you're spending money. So you're in the 3 months looking to get a home loan. If you can cut down on any of your expenditure, that will be helpful. Otherwise, the banks may be taking into consideration an actual higher cost of living.
Yep.
if your living expenses have been abnormally high for the last 3 months.
Whatever you're doing in the 90 days leading up to borrowing some money and acquiring a formal finance approval, maybe just scale back on the things, luxury items that you may typically spend on but don't necessarily need. We spoke about Zip Pay, Zip Money and Afterpay. Would you encourage it to be in everyone's best interest if they've got those lines of credit to maybe minimise or pay them off altogether and close that line of credit down?
So under the responsible lending, I want to be able to show the bank that over the last 3 months, if you've got a Zip Money Pay and if the minimum repayment's $60, but you're paying $100 extra, I can demonstrate to the bank you're making extra repayment of $40.
Yep.
Which looks good. It shows that to the bank that you can afford to make extra repayments.
Yep. Well, Simon, thanks very much for joining us on the couch today. Your expertise and knowledge is invaluable in dealing with people's greatest asset and financial decision. We're going to pop Simon's contact details at the end of this video, so if you're not working with a broker or aligned with anyone, Simon is a great contact. I use him personally and recommend him professionally. But I'm Chris Janzon from Harcourts Sargent. Thanks for joining us and bye for now.